Welcome everyone to today's webinar. I first want to start with a sincere apologies on that issue that we had there. Had a little technical issue with an incorrect link, so our apologies. It's never happened to us, so unfortunate that it did. But either way, we're here, excited to get started. I'm here, have the great pleasure of having two phenomenal individuals here that come with a plethora of knowledge of how to deal with strategies within community associations, whether it be from strategic maintenance items, capital improvements, and financial management. We know, particularly in the condo world, there's been a lot of challenges the past few years. Today, we'll talk a little bit about tips and tricks of how we're maneuvering through these challenges, as well as same things occurring within the HOA space, whether it's not having to deal with structural integrity reserves, but it's having to deal with, the cost of construction, the cost of improvements, the cost of roadways. So today we'll be touching up on those challenges and providing some tips. We do have a Q&A open, so go ahead and click either on the top right or on the bottom right. You'll see a Q&A. Feel free to put any questions that you may have in there, and myself, Robert, Marc, or Chris will do our best to get to those questions. So with further ado, why don't we start off with some introductions. Robbie, maybe if you could start off with yourself, say a little bit about where your firm, what specialty you have, and then we'll go around the screen.
Good morning, Rafael and Chris, and thank you guys at Affinity once again for having me. I must be doing something right if you keep inviting me back, right? So for those who don't know me, I am one of the shareholders at Siegfried Rivera. I have been with the firm since the year 2001, and my practice is focused almost exclusively on representing community associations throughout Southeast Florida. My practice includes pretty much anything you can imagine pertaining to community associations, from writing demand letters for the excessively loud barking dog to providing complex opinion letters and negotiating complicated agreements and contracts and redrafting association governing documents. We are excited about this topic. It kind of segues into a lot of the new developments that have arisen in condominium and homeowner associations within the last few years with regard to inspections, maintenance of property, reserves, budgeting, etc. That I think we may have good substance for our listeners today. So looking forward to it.
Great. Thank you so much. It's always a pleasure to have you on, Robbie. I know we do a lot of great work together with the many associations we serve. And next up, we have Marc.
Hey, everybody. Happy Taco Tuesday. It's Marc Landis from Hafer. I know it's been a rough week already. We had St. Patrick's Day for those who are easily distracted, and for those of us who want to do something over this busy season but can't. But as far as it goes, Hafer's been around for 45 years doing audits, reviews, compilations, as well as having a full service tax department to assist associations. What makes the firm really unique is that tax aspect. A lot of situations lately have been out of control with associations. You have associations selling golf courses, you have associations selling things that were personal assets that have a lot of tax implications on the associations. So if you guys are going through any of those stressors, our firm is here to help with any of those considerations. But like I said, we specialize in condo, HOA, as well as co-op. That's kind of our bread and butter.
Great. Thank you so much, Marc. It's always a pleasure to have you on as well. I know you provide a ton of knowledge, especially when it comes to the stuff that may be a little bit more complex for board members or managers. So I appreciate you being on. And last but not least, Chris Cooney.
Hi, everyone. My name is Chris Cooney. I'm responsible for Affinity's business development from South Broward, Miami-Dade, and in the Keys. I've been with Affinity since 2004, and really looking forward to this discussion.
Excellent. Thank you so much, Chris, for being on. As for myself, my name is Rafael Aquino. I'm the co-founder and CEO of Affinity Management Services. We're a community association management company. Our goal here at Affinity is really to help our community association leaders execute their vision. We do it through our proven process: align, execute, deliver. So thank you all for attending another webinar. Again, my sincere apologies for the initial challenge that we had. But let's go ahead and jump straight into the topic. We're talking today about strategic maintenance, capital improvements, and financial management. And Chris, I think it'd be great to kick you off here is, I know you're always meeting with new associations, that may be interested in making management changes and so forth. I guess if you could kind of talk to us a little bit about what you hear from board members, especially newer board members, when it comes to strategy or when it comes to financials, what are you hearing in the market and what are you seeing in the market with many of these HOAs or condo associations?
So we emphasize the importance of having just alignment with the board on what the top priorities are for these projects. It's really a mixed bag. With some boards are very much on top of their finances and can accurately pinpoint the resources needed for top projects, and with others it's more of a working process that you have to go through. I do like to remind them that it's a good idea to have a current reserve study, being inside of 3 years, just as we see the fluctuation in the cost of materials and labor for different projects. But I know at Affinity we really try to align with the boards to make sure that we're executing on the top priorities that they have.
Excellent. And Robbie, bring you into the conversation. So I know there's been so much that has gone on, obviously, with the condos. There's new legislation, which we're hearing from our House of Representatives and from our legislators, I should say. What have you seen in the market? What kind of impacts to maintenance or to capital improvements have you seen from your side? I know pretty loaded for you, but
we only have an hour, right? Look, in a nutshell, what we're seeing with regard to the impact that it has occurred in the marketplace, resulting from a lot of these new requirements. And when I'm talking about the new requirements, I'm talking about the bidirectional amplification systems, the structural reserves, the higher threshold for waiving reserves, which back in the day you could get as few people as a majority of a quorum. If you had a quorum of 30% to waive reserves, and it was a majority of 30%, and you have a 100 unit condo and 30 people showed up and 16 people voted to waive reserves, you could very easily waive reserves in many condos. Now the threshold was increased. So there is a lot of this paternalistic attitude that the legislature has imposed upon us, including as well the mandatory structural integrity reserves. All of this has coincided in requiring associations that had not been used to reserving funds to now, based upon the mandates from the state, having to infuse a large degree of capital into their reserves. You tie into this the fact that interest rates have gone up higher than what we had all been accustomed to borrowing, and you knock on a bank's door now to borrow a line of credit because you need to upgrade your buildings or you need to perform the work that is necessary to obtain a life safety, strike that a milestone certification, or you got to fund reserves that you had not been used to funding, and you're dealt with a tough decision. Do I assess my unit owners a very hefty amount of money that we need to fund immediately, which does put a huge strain on a lot of the constituents in these buildings, or do we find alternate means of raising funds in these buildings, such as going out and getting lines of credit for the necessary repairs, which in turn we may have a longer runway to pay back, whether it's 3 years, 5 years, 10 years, 20, in some cases even 30 years. The problem in those cases, of course, is that you're borrowing now at 7%, as opposed to the 3 and the 2.5 and the 4 that some buildings were used to borrow at some point, a handful of years ago. So it's not surprising that you see a huge outcry in the market. It's not surprising that you hear the stories being told about um, buildings inventory of units growing throughout South Florida. Um, and it's also not surprising that you see a lot of politicians coming up with new proposals of how to mitigate some of these issues that the associations are having to deal with. You see, for example, some of the proposed legislation, and I want to caution, none of these bills have been adopted.
Mhm.
All of these bills will change 50,000 times before they are adopted, assuming that they even get adopted. So, but you do see some themes being put out there by the legislators, like extending dates of compliance for these requirements, or making lines of credits more feasible or more convenient or more available for condominium associations, or trying to alleviate insurance in some cases. And at the same time, you also see some politicians kind of turning up the heat and saying, if you don't comply with these requirements in a timely fashion, then you're not going to be able to get some of the insurance that you need to have, or there may be other consequences. So there's a lot to digest in the marketplace nowadays. I think we need to accept, as an industry, as board members, as managers, as attorneys, as accountants, we need to accept the reality that the need for these structural integrity reserves is not going to go away. The need for milestone inspections in one shape, form, or another is not going to go away. And while it may be somewhat delayed or somewhat modified, it's the new reality of the world in which we live.
Correct. No, you bring up some extra interesting points there, and I would agree with you, Robbie, there that yeah, the reality is the reality, and it needs to be faced. And there are, I like the way you said it, that there are some that are putting up the heat. Like, it's interesting to see what Vicky Lopez proposed of, if you don't have your SIRS done, you can't take citizens coverage. So as you stated, we're still a long way before, if this happens or if it doesn't, but it's kind of showing you the cards that are being played at the moment. And the reality is as you stated, it's the managers and the attorneys and all those involved have a fiduciary to do what is currently in law and ensure that it's happening the way it needs to happen. And Marc, I know we were talking a little bit offline of like the percentages of condos that you saw that actually passed the SIRS and possibly, well, should have taken the vote to not pass it this year. Talk to me a little bit about what you're seeing on the finance side, on the financial statements and so forth. Are you seeing more where people pass straight special assessments, a combination of loans? And how are you, how are things working out now with the audits and so forth on the financial side?
I think that'll, to piggyback off of what Roberto just said, you have the legislative so many changes, and then financials have been so many changes because of all of the legislative changes. I mean, I have so many clients, they're really scared of the future because, just getting a financial on a monthly basis has been tough for a lot of associations. Resources are low. Wall Street Journal said that there's 430,000 opening positions in accounting throughout the nation, and this is after outsourcing. So first of all, the data is coming to us late, or later than usual. We're doing the best to process it. With regards to loans, I think associations pretty much are 50-50. I see a lot of associations passing with 50% passing with loans, 50% trying to just have the association come up with the funds. I'm telling most associations they should at least try to give the option to those who need it. There's so many Floridians who are in different situations. Some associations are like, well, we're an affluent, community. We really don't need to give that opportunity to the membership. But then again, you have a lot of people who are on fixed incomes. Maybe they bought in 10 years ago, 20 years ago. Maybe they inherited it from parents. And, I always try to tell the boards, try to give some of the older members, some people who are more fixed funds, that opportunity to possibly leave the community with more dignity than you see on the news. Some horror stories where you see people have to come up with 80, 200,000 all at once. You know, it's interesting how a lot of these communities are shuffling, and so many times, you know, I'm constantly, I feel like I'm playing assistance with the attorneys. I'm like telling my clients, go to your attorney. I cannot interpret the law for you. You know, like I'm a CPA and I'm not going to get into that lane. And, you know, so many times I had somebody, you know, they passed a special assessment. It was just a comedy of errors, how many things they did wrong. And I was like, tomorrow is your meeting. You have errors, minor errors, you have major errors. You need to talk to your attorney about this and see how much he can clean up. And they're like, well, can't you do it? And I'm like, listen, these are all legal thresholds that you've abandoned. You need to get in touch with your attorney. And the main thing is people are just trying to save so much on cost that they're really missing the boat on the value. The value is getting in there early, speaking to the attorney, speaking to the accountant early so that it can be fixed up front, as opposed to 9 months down the road when people are paying assessments and you haven't passed an assessment correctly.
Right. No, I think this is the past few years has really leaned heavily on the importance of having those strong partnerships. If you had it with your attorney, if you didn't, you were forced into it already. Same thing goes with your CPA or even with your management company. I mean, I think even as legislation continues to occur, and as Robbie mentioned, it'll continue. It's just part of the process. It's part of the sausage making process that happens. It's important to have those strong partnerships and understand that as a board member, you need to rely on those professionals. Similar to you, we get a lot of stuff pushed to us. Well, why do we have to contact CPA for it? Why can't you do it? Why do we have to contact the attorney? Why can't you do it? But in reality, you know, we all have to stay within our lanes, do what we do best, and then refer the information that's needed from the professionals, whether it be legal, whether it be an engineer, whether it be a CPA, to let them handle it. And you know, we try to explain that it's a cost of doing business. Hard to understand because right now everyone's tight for cash when it comes to associations, particularly the condo associations. But again, that's the process. That's the process that has to be followed. Touching a little bit like on capital improvements, Chris, I want to bring you in here, and you know, from a board's perspective, how important? Let's touch a little bit on HOAs because I know we stress a lot on these webinars on condos, and I think it's important for those that are HOA listeners of. What have you seen in your experience with capital improvements? Let's say those HOAs or condos that, you know, aren't taking the capital improvement project seriously or aren't doing what they need to do in order to maintain the property. Are there any pros and cons that you've seen on your side of whether it be from maybe potential sales or people wanting to purchase into that association? What's been your experience?
So I think you can see an impact on the potential marketability of these communities. You might have a community that has let's say, single family residences that's nicely manicured, but then you get to the common areas, the clubhouse and pool area look really run down. There's always new neighborhoods coming up down the street, and at some point when you're trying to get the best buyers, you're competing with these other neighborhoods. I also see other communities where they're factoring in lifestyle components, and that really depends on having those facilities really at a top level.
Okay.
So
Yeah, I can totally see that. I mean, you'll see it with some of the bigger HOAs that have come out in the news that now their efforts are more into correcting the challenges that exist because you know they've gotten a bad reputation. So again, those capital improvement projects are very important. And Robbie, bringing it from a legal perspective, at least from the condo side, what are some of the challenges that these board members could find themselves if they're not, you know, doing what they need to do, whether it be is on the repairs of the buildings. Now it's a slightly different situation because they should have the money. But what happens if they do have the money and they decide they want to hoard that and not do what they need to do?
Well, I mean, look, first and foremost, you mentioned the word fiduciary earlier on, and it's a legal term. You know, for those who are familiar with it, you know what it is. For those who are not, it basically means that it's a duty that you owe by virtue of being an officer, by virtue of being a board member for a condominium association. You kind of have to put the interests of the association ahead of your own. Um, And if you don't, and if you put your interest before those of the association, and they don't line up, then you could be considered to be in violation of your fiduciary duty. Now, what does that mean? What that basically means is that you can become personally responsible, personally liable in the event that there is any damage or consequence stemming from your failure to comply with the law or with the requirements. Now, in most of your community associations, I would venture to say that you all, as board members, are protected by what is called directors and officers liability insurance coverage, and you also are protected by what is called a corporate indemnification, which is required pursuant to Section 617 Florida statutes that governs not-for-profit corporations, which is what most, if not all of you, or your associations are set up as. The implication of this is that if you breach your fiduciary duty to the association, the risk to you is that you may not get coverage, likely won't get coverage under the directors and officers liability insurance policy, or you won't, or you may not benefit from the corporate indemnification, which means the association won't be paying for your defense or your damages in the event that somebody files a lawsuit or a claim against the association resulting from the association's failure to comply and/or its board members' failure to comply with the legal requirements, with the statutes. And you see some of this specifically delineated in the statutes. If you don't, for example, get the appropriate property insurance for your association, if you don't timely perform your milestone or structural integrity reserve studies and complete the requirements and fund the reserves, all of these result in breaches of fiduciary duty. The question then becomes what damages have resulted from that, and that's why Rafael's question is a very good one, because your failure to comply with all of those requirements can spell personal liability to yourself. Which, if we felt and if we thought that having to pay the special assessment was pricey, wait till you are confronted with the claim or the consequence for having to pay your defense costs on those claims, on the damages that might be imposed against you, the time you're going to have to, the additional time you'll have to take away from work to deal with a litigation, to deal with a lawsuit. It's just not worth it. It's better to do the right thing. And it's really not complicated. It's not a difficult thing. We make it easy. The lawyers make it easy. The accountants make it easy. The managers make it easy. We give all of these free seminars. We spoon feed to all of our clients, to all of our listeners, to all of our subscribers, what the law provides for. And we also tell you, call us up. If you have any questions, call us up. Do you rather pay your lawyer $50 for a 15-minute call and get the right answer, and so you could do the right thing? Or do you rather pay $50,000 in legal fees or plus on having to pay the damages that you might have to pay in the event that you're found guilty of having breached your fiduciary duty to the association? So, you've done the hard part, which is you've become board members. You put up with all of the stress. You put up with all of the criticism from the members who live in your community. We recognize it's a thankless job. So you've done the hard part. Now do the easy part. Take the advice from management. Take the advice from your accountants. Take the advice from your lawyers. Make the investment in getting the proper advice and in doing the right things. And honestly, if your constituents cannot afford the assessments in your community, if they cannot afford what is necessary to live there, then they shouldn't be living there to begin with. And it sounds tough to say it, but it's the reality. And it's not fair for them to expect to get away with not paying anything and be living off of the backs of all of you other guys that are paying your bills and paying your assessments to the association. So, I think that's probably the most sage words to have board members live by.
Correct, and those are some great words, especially when you mentioned about the education component. And you do see it a lot. I mean, fortunately enough, our legislators did pass, I was in agreement with the board certification courses, the importance of that, because it really gives you, it highlights the importance of what it is to be a board member and everything, not everything, but a majority of the work that it entails. And that goes from the legal aspects, from the requirement aspects, from things that you must be doing each and every year. So for those board members that are on the call, I hope by this time you've already been certified. There is a deadline to be certified depending on certain criteria. So if you need any courses or anything, reach out to our team and we can let you know when the next available courses that our attorney partners such as Siegfried do, so that we can get you that information. But additionally, it is hard to say it, right? Robert, I'm in the same boat. We say it all the time that, listen, if they can't afford it, then you have to do what's right for the whole community. And I can recall vividly, because that's when we started the business back in 07, 08. I can recall, where, you're being a neighbor where, well, this is my neighbor and I don't want to move them into foreclosure. And all of a sudden the individual was there for almost 6 to 7 years. So in the association, when you're sitting on the board of directors, you're a leader, and many times as a leader, you have to make difficult decisions for the rest of the group. And that same, there's no difference when it comes to sitting on the board of directors. You have a responsibility to the rest of those that live within that community. So from your side, Marc, talk to me a little bit of how you've seen like these. Are you seeing a little bit more knowledge from the board members now that they have those that completed the structural integrity? Are you seeing that they're actually putting together, let's say, like a plan or a 1-year outlook of what needs to happen in the community? Are you seeing any of that? Because now they have an instrument that could be utilized to help them make better decisions within the community.
I think you're getting a lot more educated board members.
Mm.
I think, the whole battle for the last, I don't know, 50 something years in this has been price versus value.
Yeah.
And it's always come down to, you either have the boards that are fighting to get the best price, or you have the boards that are fighting for the value. Now, because of all the education, people are like, we have to go for the value. And that's just the way it's going to have to be. And, I remember 10 years ago, it was this industry was more, you had board members, I have to give the best price to my constituents. They're coming to me, they want the assessments the same. Now it's, we have to do the right thing. We have to add that value. I think everybody is trying to more than ever save money. So you have people thinking, okay, well, we're going to have our 40-year inspection this year, and we're going to have our SIRS. Let's make sure that we make this, worth our while. Let's get an engineer in here to help us guide us through this process. And I think this is what the more clever boards are doing that are more educated. You still have a lot of these boards that are handling things like it was 10 years ago. And I'm like, you guys are going to get slaughtered at some point, because all of this cost savings doesn't really build up that value. And you're seeing this in so many associations, a lot of associations under 50 units that are on the water. They're getting eaten up by venture capitalists who are buying it unit by unit and just going to demolish these buildings because the land is worth more than the property currently sitting on it. And as Chris had mentioned before, everybody's like looking at these other buildings on their street. Well, what are their assessments? Well, what are their amenities? What is the value that has been added to this? If you look at building A, and building A doesn't have all of these accommodations, and building B has all these accommodations, and the price is, so far off because you have one building that hasn't paid into the system, into its own resources for the last 30 years. I've seen so many professionals tell me that they've gone to a meeting and, people are playing the blame game now. And it's like, for the last 30 years, you haven't had reserves. You guys have set yourself up for a lot of hurt right now. Plus you have your 50-year inspection, plus, or rather 40-year inspection coming up. Plus you have this, and everything is so painful because you've had no preventative measures. And, these are the buildings that are so far behind. These are the buildings that are getting eaten up by the economic situation, that the land is just worth more than the property sitting on it currently. And, these are, I get so many calls from friends. What do I do? I'm in this situation. And I'll go through their financials as a courtesy because they're my friends. And I'm like, you can't afford to live in this building anymore.
Yeah. Yeah.
And it's coming up with that idea of, like, where are you going to go? What's better for you? And, like, that's the reality of South Florida right now, is a lot of people are going to have to make some choices.
Yeah, I mean, we were talking a little bit about offline, but again, not to fearmonger here, but things are starting to pile up. As we spoke earlier, Mark, that you're seeing inventory of condos in South Florida with 10 months, and last time that was seen, was in the financial crisis. You're seeing condos being listed that are 145 plus days listed. So, yeah, things I think are starting to pile up. I think where it could potentially get very scary is once unemployment rates go up, because, people, not all, but there are people that are tapped out. So it's important that whatever steps you're taking as a board, that you're taking those steps in a swift manner, and not just letting things be. Where I've seen the smarter condos, as you stated, is those that were going through their 40 and 50, because you get to reset all your painting, you get to reset your roofs. So some of the condos that we have that are 40 years old, it wasn't that big of a hit. It was a hit, but it wasn't that big because they were going already through their restoration projects, and they were smart enough to get ahead of it, because we saw it happen with the unfortunate circumstance of Champlain, where the initial, I think, estimates were in the $8 to $10 million, and all of a sudden they wait 4 to 5 years, and those estimates shot up to 30 million. I think we're in the same position now. Whatever political side you take doesn't matter, but there are tariffs, there are things that are impacting. One thing that we need to keep top of mind is that because of the SIRS, the construction industry overall in general is going to be very busy for the years to come, because now they have requirements, and now that they have the funds, I think it's going to make it much easier for the board once we get through this. And the reason being is because, many boards didn't make decisions because they didn't have money. Now, in this case, now that you have the funds, you don't have to make that decision. Okay, do I do the lobby or do I do the roof? No, in this case, you have to do the roof. That's what the money is set aside for. So I think once we get through this fog, it is going to make it a little bit easier, I would say, for us to manage condos, both from all of our professions. But ultimately, right now we're going through the thick of it. And, it doesn't help with the combination of the way the insurance costs are at today, but that could be a whole webinar of its own. So with regards to, let's say, red flags, Mark, talk to me a little bit about any red flags that you have seen or anything that may pop up now that we're in the audit season, tax season. Is there anything that boards should have top of mind to prevent any red flags popping up on their audit or review and so forth?
I had a conversation with a very, very intelligent board a couple of weeks ago, and it was very eye-opening. Some of this legislation is starting to just pop up where you're like, okay, this is going to really have significant ramifications. And the point in case came up with a board that pools. Now they have to have two pooled components, one for SIRS, non-SIRS. And, we were just going over the numbers. I can't make a management decision because that's, going to impede my independence. But, like I'm showing them there's ramifications, because they're like, well, can't we just throw all this money in the SIRS? I'm like, well, that's one way of dealing with it, but you still are going to have your vote. You're still going to have to vote down your non-SIRS, and it's a higher threshold, as Roberto just said. So they were just like, oh my gosh, we didn't think about this stuff. And then they were like, well, can't we put the minimum in one in case we need it for the other? Because they're like, we need to get paving done in 2 years. That's a big cost. We can't avoid that. And then I said, well, whatever you take from one pooled, you're going to have to pay for in the other. And they're just like, this is heart wrenching. Where do we put the money?
Yeah.
Like,
yeah.
There's no magic code to know what's good. And I kind of expressed to them, no matter where you put it, you're putting it in one pot or the other. And now there's this segregation. And they're like, well, why can't we just keep it all in one pot? And I'm like, the legislation is not going to let you do that anymore. And, I go, there's real ramifications. And they were like, well, can't we just do, instead of plan A or B and putting it in one pot or the other, can't we just create a third pot? And I'm like, then you're not compliant at all. Like, you're not funding your SIRS. Now you're not funding your non-SIRS. You're just funding like some, non-statutory reserve. And I'm like, that's not going to be compliant either. So I'm like, these are all things that people are trying to, like, outthink the system. And I'm like, there's repercussions no matter what you do. So these are little questions that are popping up now. I can say that it's going to get worse as we get into 2026 because now we no longer have the option to waive SIRS. Now we're committed to it.
Of
So
course.
for some of these associations are going to be better off. I know some associations started off in 2022 getting their study, started funding in 2023. It's going to be a hard reality for some of the associations that are just going to be thrown in the deep end of the pool in 2026 and have to deal with the reality.
Of course, of course. Bobby, I have Robert, I have a question here regarding Theodore asked a question is, were there any changes to the new laws regarding the ability of associations at 3 stories or less to waive the reserves?
No. No, the laws that were enacted a couple years ago, 2 or 3 years ago, that required 3 stories or greater buildings to get their milestone inspection. 3 stories or greater condos or co-ops to get their milestones and to do their structural integrity reserves. Those laws remain in place. Okay, there is a bill that has been proposed with the objective of allowing, or I guess the intended objective is to add into the building code statutes a provision that seems to try to allow the buildings that are lower than 6 stories to opt out of the structural integrity reserves. Now, coincidentally, it only is making the change to the building code, but there's no corresponding change, at least none that I've seen, to the Condominium Act. And in the Condominium Act, you also find a provision that makes condominium associations responsible for getting their structural integrity reserve studies performed for buildings that are 3 stories or higher. So, if they don't change the bill and if the bill passes, then you might have conflicting, provisions of the statutes. So, look, the short answer to the question is no. Everything stays the same for the time being. Be on the lookout to see what fizzles out of the legislature. There's going to be a very elaborate process of revising a lot of these bills as time goes on prior to the end of the session. We will have to see, when the dust settles, what bills ended up being adopted, which bills end up becoming law. And at that point, we will all regroup and, share with our listeners and anybody else who is interested in learning what if any changes result from the legislative session. Again, this is all, I think, common sense. I don't live in a condo. I live in a house that I need to pay taxes on. I need to pay my own insurance for my house. When I have a roof leak, I have to pay for the roof to be changed. When I paint the house, I have to paint it. All of these are things I have to do. I'm not waiting on someone else to pay it for me. I'm not waiting on some miraculous law to come down from Tallahassee to tell me that I don't need to get insurance or to tell me that I don't need to pay the money to pay for my roof. If I don't have enough money in the bank to do any of these things, I need to put money away year to year so that when I do need to replace my roof, I think I got to replace it maybe in 8 to 10 years. So I'm putting away money so that when the time comes, I can get my wife the nice metal roof that she wants on the house, and
Sounds like you have to place the roof soon.
but those are things that I'm planning for. And that's what reserves are. That's what budgeting is. It's you're planning for something that is going to happen. I am not taking the approach that, I'm not going to do any of these things.
Correct.
and I'm going to sell my house in 8 years before I have to replace a roof, and I'm not going to be the owner, so it's not going to be my worry. It's not going to be something that I'm going to have to be worried about. But it is,
It is.
because if I don't properly maintain my house now, if I don't keep it looking pretty, if I don't, make sure the windows look good and work well, and the paint is fresh and clean, and that the roof looks good, and that there are no visible signs of leaks, if I don't do that, then when I sell my house, the price is going to be significantly lower than what I otherwise could have gotten. So come on, people. This is common sense. There are no free rides. Not in condo land, not in HOA land, not in co-op land. And we've been living for decades under this perception that if we keep waiving reserves and not paying reserves and not taking the medicine that we need to take as responsible homeowners, that we're still going to be able to live life and be happy in the condos in which we live. And that's just not the case. And that was the message, by the way, that the Speaker of the House and the President of the Senate of the state of Florida essentially gave when the governor implored upon them to schedule a special session to tackle and alleviate some of the burdens imposed by the structural integrity and milestone inspection reports on condominium owners. And when the governor was listening to the cries from condominium and HOA and co-op stakeholders and citizens, the Senate president and the Speaker of the House for the state legislature, both of them said, no, guys, we got to do this. We got to tighten our belts. We got to bite the bullet, pay these reserves, do these inspections. Once you do, then you will have wind in your sails. It will become easier. We will get used to that type of lifestyle going forward. So there's a lot of tough love being spewed out in Tallahassee now, but whether that's a popular sentiment or not amongst our listeners, I have no idea, but that's the reality. And we're just going to have to, be ready for it.
That's right. That's right. And I want to keep it here with you, Robert, as I have a question from Liz, and she's asking, is there an existing fine for buildings who do not include the CERS into the 2026 budget? And was there an oversight board? Does an oversight board exist already?
I am not aware of the oversight board having been formed. With regard to structural integrity reserve study reports, I am not aware of what the state or the division of condominium will be fining or imposing as penalties. Theoretically, they could. Whether they will remains to be seen. And while not part of the question, milestone inspection reports are governed by the municipalities, by the governing authorities having jurisdiction, by the local code enforcement or building departments. And depending on where you live and which municipal or county government you live under or in, those are imposing fines, some more than others. So it really depends from a milestone perspective on where it is that your community association is located.
Correct. And to add to that also, and listen, there isn't any that I'm aware of either. But at this point, it's important to just note the responsibility that you have. I mean, depending on the condition of the building, depending on the property, God forbid something would occur, and you're sitting on that board, you could be finding yourself individually liable for these kinds of things. So ultimately, where sometimes some of these statutes maybe don't have a direct teeth that say, okay, here's a direct implication. We're in the state of Florida, and I can promise you they can find ways to impact you individually for it. So, Chris, I want to bring you back into the conversation. I know, the importance of really putting together a vision for a community. I think that's overlooked many times within our associations, of really handling these nonprofits like a business. Talk to me a little bit about what you've seen, or if there are any steps that a board can take in order to put together a vision for their community and how to be able to execute on that.
So it definitely is helpful that the boards that are aligned together and can agree on the vision for the community, those are the ones that tend to get things done. Um, as we've discussed earlier, I think it's really important to make sure you seek the advice of the professionals that you need to, attorneys, accountants, engineers, and develop those, especially those reserve studies. And that's a blueprint for setting up the projects. And that's what I know what Affinity does with our clients is really help identify those top projects and then set up milestones to achieve those. So for anyone that's taken those steps, that's where we can help lend some advice. And here's how some other communities that we work with are doing those same types of projects. This is what you can expect as a board for those milestones to be, so that we're checking in on a regular basis for that.
Yep. I mean, I can't say it enough how important that is. I mean, if you're considering a change, or even if everything is going well, you need to have a plan. Like should be a plan of what our goals are. What does the outcome look like for 2025? What would make us happy as a board, and work your way backwards of, okay, quarterly, this is the way that we would get there. What are the weekly objectives? And then that way the expectations are clear. This is a very difficult industry. There comes with many challenges, and many of us have said it's thankless. So one way of making it at least rewarding is to know, okay, what are the goals that we have? How do we get to those goals? And you can clearly understand, okay, what's my role in the board? What's the management's role? What's our partner's role? And that way it could be a little bit more fulfilling than just feeling like you're constantly just putting out fires rather than dealing with the bigger projects that your partners need to support you with. So I know we're coming up on the hours, a little bit shorter than normal, but I guess I want to start with you, Marc. Any final comments or suggestions or golden nuggets that you want to provide to our listeners, and if you can wrap up on how they can reach you as well.
Just be vigilant. I mean, right now is the time just to plan, get everything together. For the most part, with the financials, look at this year's financial. Try to understand how it impacts. If you're on a board right now and you have members that still don't understand how the SERS is going to affect them and you haven't implemented, have a couple town meetings, explain to the people what's gonna happen and how it's going to affect them directly. As you said, for some people, if they have the more information up front, they may decide this community is moving in a different direction and they need to find themselves in a situation that's more to their liking. And as far as how to reach out to us, Hafer has a website. My email address is my first initial last name, mlandis@haferco.com. We're always here to help. We get lots of questions from people. We do a lot of presentations. Nicole is very much helping out with the FICPA with some of the hearings on these issues. A lot of legislation coming down. Just keep involved is what I can say to most of the board members. It's getting a lot harder to just catch up in the ninth inning when you're trying to put that budget. And there's still some of those boards out there. And I'm like, you guys, this is incredible. You're in August and you didn't have these discussions early.
Yep.
It's getting harder and harder just to come in the ninth, in September and pass those budgets effectively and efficiently without doing the prep work. So that's all I can say is start early.
Well, thank you so much. Thank you again for being on, Marc. Always a pleasure. And Robert, any last minute, any golden nuggets there and how they can reach you?
Yeah, no, I echo what Marc stated. Just plan ahead. It was something we had been preaching since the first moment we saw the adoption of the structural integrity reserves and milestone inspection reports. If everybody would have listened, the pain would have been a lot less for a lot of condos, but a lot of people unfortunately didn't. And a lot of people kept gambling on the legislature bailing them out and changing the laws and extending the deadlines again. And, a lot of people were on the losing end of those bets. So just, plan ahead. The responsibilities are there. It's not difficult. It's not complicated. We know what we got to do. Let's just do it. My availability, I'm here for anyone who wants to reach out and ask questions, and see if we can assist your association in the event we don't already represent you. If we do, feel free to call me as well. My email address is rblanche@siegfriedrivera.com. That's RB as in boy, LANCH at SIEGFRIEDRIVERA.com. So you can find us on the web, on the internet, and also reach me that way as well. So I appreciate, again, Chris and Rafael, the opportunity, and Mark, thank you for co-presenting as well, and look forward to being invited the next time, hopefully.
Excellent. Definitely. Thank you so much, Robbie. Always a pleasure to have you on, and always great working with you guys as well. Chris, any closing remarks?
A reminder for any board members that still need their certification, contact us for, my email is ccooney, first initial last name, at managedbyaffinity.com. Getting that education is very helpful as you're working towards setting up these goals that we've discussed.
Great. Thank you so much, Chris, for being on with us. And I guess my golden nugget is pretty simple. It's just, make sure you have a plan. I know it sounds simple, but just what are your 3 to 4 objectives for the year? We're coming up at the end of Q1. That way by now you should be looking at your finances. Hopefully you're doing it monthly, but if you haven't done so, take a look at what's going on for the quarter. Where are you with your variances? Are you seeing that you're going to have any challenges? How are you going to manage those challenges so you're not all at the end of the year wondering what occurred, as Marc was saying a little bit earlier. But yeah, just check in on where you are with that 1-year vision that you had for your community. And outside of that, if you need any tips on how to put together a vision for your community, you could reach out to us. We have a simple guide, and you could reach us at managedbyaffinity.com. Thank you all for being on. Again, I want to apologize for that technical issue we had in the beginning, but we'll see you soon, hopefully in another webinar. And again, thank you, Robbie. Thank you, Marc. Thank you, Chris, for being on today. See you in the next one. Bye-bye.
Thank you, guys. Bye-bye.